Welcome back. Now, trade relations between Africa and the United States are once again in the spotlight, and South Africa's citrus industry is breathing a sigh of relief after US President Donald Trump signed an executive order exempting oranges from punitive import tariffs. The move restores the competitiveness of South African oranges in the US market, raising hopes for stronger exports and job creation ahead of the 2026 season, even as other citrus varieties and broader trade relations remain under pressure. To unpack what this means for growers, consumers, and ongoing trade negotiations, we're joined by the CEO of Citrus Growers Association of Southern Africa, Boitshoko Ntshabele. Boitshoko, thanks so much for your time today. Before we chat about the reprieve the industry has received, perhaps let's take some steps back and look at those SA-US relations with regards to this AGOA bill that has been passed. What do you make about the concerns that South Africa is not even being mentioned? Are these concerns valid, or should we just wait and see how everything plays out?
Thank you very much for having me, Ms. Lichela. Indeed, you're spot on. I think there's very little that we can do but wait. I think we need to pay attention and see what the statements are like in the US side of things. From a CGA point of view, we're not quite keen on AGOA, to be honest, because as we have always said, AGOA is almost a gift that the US administrations over the years have been given to sub-Saharan Africa. And as we have seen, if we are to depend on it, we will always be hanging by a thread, so to speak. And what we are saying and advocating for is that we need for negotiations between South Africa and the US administration to be fast-tracked, at least so that we can have something that is definitive, something that allows planning, that we are sure this is where we stand in terms of trade. And that would be the reaching of an agreement in terms of trade between South Africa. That for us is the golden standard on which we should be looking at our trade with the US.
Is AGOA in the current landscape still relevant, especially in this landscape where we have these punitive tariffs, where it seems like it's country by country negotiating with the US?
From the US side of things, it looks like it's something that is relevant. Of course, we would take whatever settlement that comes out of AGOA if it's positive for us, mainly because distance makes us a little bit uncompetitive. 30% tariffs makes us more uncompetitive compared to our competitors in Chile, Peru, who are much more closer and therefore have the benefit of proximity, but are also sitting at about 10% tariff. So if AGOA is the next best thing, we'll take AGOA whilst government and the US administration are negotiating on a long-term basis for a trade agreement of sorts.
And surprisingly, even with the current landscape where we are seeing those 30% tariffs in play, where AGOA has expired, the citrus industry has fared well, posting a record-breaking season. What's behind that performance? Did we perhaps overestimate the kind of impact those tariffs would have on the industry?
Not quite. So the benefit that came with performance of the year is that, one, we went into open markets. So the Northern Hemisphere season ended a little bit too early. And therefore, when ours started, the market was open, meaning that there was not a lot of fruit available. So there was a lot of demand, which pushed a demand for South African fruit. Plus, we had the benefit of a good season where there were not floods, there was not a lot of hail, and therefore we had good pack outs. So top quality fruit coming out of our pack houses. We also had young fruits that came into fruiting and producing some of the best fruit that we got out of there. So all around a very good outcome for us, and we are hoping that it's something that puts us on a upward trajectory and a trend that we want to see going forward.
And I'd also like to know, considering that those tariffs were also implemented towards the end of the season, right? Are we likely going to see maybe an impact going into the 2026 season?
So right before the announcement of the 13th of November, where we have now a reprieve for oranges, so to speak,
Yes.
we were a little bit concerned that, yes, we were able to front load most of the exports for this year. You would remember that the tariffs only came into effect towards the end of August, and by then most of the exports to the US had already been sent through. So we survived by whisker, so to speak. We were concerned about next season. We are lucky that there has been this, call it good gesture from the US administration, but it's something that we've been advocating for quite some time. We've been saying that we are not competing for jobs with the US producers. We are not competing for markets. In fact, we are complementary because we are counter-seasonal. So when they go out of season, it is when our season starts. And similarly, when our season ended towards the end of the year, theirs just began. And therefore, we're almost doing a handshake over the years to the benefit of the broader citrus industry, whether in the US or in South Africa or anywhere in the world. I think if we continue on the basis of this good handshake, both countries, both consumers of citrus on the other side of the Atlantic benefit.
All right, let's leave it there. Thank you so much for your time and just taking us through the dynamics and everything playing out in the citrus industry. That was Boitshoko Ntshabele, CEO of Citrus Growers Association of Southern Africa.